The obvious choice for stock of the day was BlueScope Steel, but I know my guests quite well, and I thought, well, Andrew's not going to be jumping on the bandwagon just because there's another offer on the table. So I actually, Mark, I'll ask you though, because sometimes I believe you will trade this type of news. So we have that offer on the table from SGH along with a US business as well. Look, the share price is rocketing today. Are you participating?
No, not really. With this sort of, I guess for the next year or so, we're very much more focused on more so the raw commodities and the finished products, and because there's uncertainty around the economic cycle, etc. But there will be demand and supply gaps for the base materials. But so BlueScope not really participating. I mean, Monadelphous today. Good announcement with BHP, $175 million contract, and we look. They're very friendly with Rio and they're very friendly with BHP, so it's not really a surprise. But they do pick up these contracts really consistently, and as you can, and we're up 3% today, but it's up nearly 100% in the last 12 months. So
you kind of stole my thunder there, Mark. I'll get our viewers across what happened. The stock of the day is Monadelphous. It's been awarded another major contract with BHP at Port Hedland in WA. The $175 million project includes civil, structural, mechanical, piping, and electrical works. Monadelphous delivered BHP's Car Dumper 3 project at Nelson Point last year. And there's what Mark's point is. The share price is up nearly 100% over the past year. So Mark, that was going to be my question. After such a hot 2025 for a lot of these contractors, can it continue this year?
I think it can. I do think it can continue, but I don't know whether it doesn't continue at the scale I wouldn't have thought. And where we're having issues with a lot of these commodities running is supply gaps, and the engineers are not going to get work if the mine's miles away from from being, if they're in that sort of early exploring or early development phase. So I mean, look, iron ore's been pretty subdued in the last year, and they do have a big portion in iron ore engineering and infrastructure and services, etc. So there could be a bit of uptick there, but look, I would say if you've got it, you would continue to hold it. It is a pretty good business. Its pipeline is at records, 2.5 billion plus. So you're not going to go too far wrong here. However, I think this company has absolutely smashed its peers. Most of the market really outside of sort of the gold miners last year. So it's probably a risky buy here. But if you've got it, I'd continue to hold it and maybe buy on dips potentially. Because I do think that these themes tend to play out over a year or so, and they are very consistent.
All right, so a hold for Monadelphous from Mark Gardner. What about you, Andrew Coleman, Teaminvest?
I think it's interesting that we're talking about Monadelphous because you just asked me the question about commodities, of course, and here's a wonderful example of that. I mean, I think what I would start with by saying is that Monadelphous, the engineering services company, is a wonderful company. It has been very well run for a very long period of time, and in fact we at Teaminvest have had it sort of in that cusp of maybe being a wealth winner or not since about 2009, so that's 16 years. And the reason for that, of course, is it generates really high return on equity and return on capital. It's been growing at a very stable rate, sales about 6% per annum, earnings faster than that, with 90+% stability for close to 20 years now. And because of the nature of the business that it's in, it's not hugely capital intensive, it's a services company, and so it can do all that with a relatively low debt to equity. The problem with Monadelphous as an investment, though, is it's the cyclicality of the nature of the underlying commodities with which it operates. And of course, when those miners have booms in price, they're prepared to spend lots of money on new capex, and when the price comes off, they postpone capex. And that, of course, affects Monadelphous. And so from that point of view, to be a wonderful investment for a value investor, for the long-term value investor, a company really has to have three things. It firstly has to be a wonderful business with strong competitive advantages. Monadelphous ticks that box, no questions. The second thing is it has to be run by honest, capable and hard-working management, ticks the box. And then the third thing is that it has to be available at a reasonable price, because a wonderful business that you pay too much for is still a wonderful business, but it's an awful investment. And the interesting thing with Monadelphous, I was just having a look at that, is despite growing well beyond inflation every year for about 20 years now, and operating brilliantly in the space in a commodity area that we know overall has sort of tripled or quadrupled in that period since 2009. An investor in Monadelphous in that period, if you'd bought in October 2009, which is when my chart goes back to, and you were still holding today, you've achieved an annual share price return of 4.5% and a yield after franking credits of about another 3%. So you've achieved around just under the market average return. Now, that's not the case if you've bought when the market wasn't greedy about Monadelphous, then your returns are well into the double digits. And it's not the case, of course, if you bought at the peak, then your returns are anemic. In fact, they may even be negative. And that's the challenge for an investor looking at Monadelphous, or at least a long-term value investor. The question you've got to ask is, will Monadelphous almost certainly be larger in 5 or 10 years? Absolutely. But is paying a PE of 32 times for a mining services company that cannot control the price of the underlying commodity a reasonable price? Absolutely not. And from that point of view, I'll put it in the hold because it's too good a company to say sell, but honestly, from here, the odds are gravity will reassert itself.
You could, though, say take some profits.
I could, but that would be sort of against most of my thinking in the world.
All right.
What I would say is if you'd bought Monadelphous at a good price in the
Yeah.
past, there's no reason to sell it. It's still a wonderful company. But would I be going into Monadelphous at a PE of 32? Absolutely not.
Okay. Thank you. All right. Nice scene setter from both of my guests.